Okay, yesterday we had news that there had been a deal struck in the Centro case. Our business reporter Sue Lannin has been covering this story for several years. There's another development in it today, so she joins me now. Sue, just first of all, tell us, paint the picture of what's actually happened with Centro.
Okay, now Centro is a very high-profile shopping centre owner. It owned shopping centres in Australia and in the US, and in fact was Australia's second biggest shopping centre owner.
After Westfield?
Yeah, after Westfield, that's right. And they expanded very quickly. And before the global financial crisis, they had borrowed billions of dollars in loans. But because of the GFC, they were unable to refinance those loans. They were having trouble, but they didn't tell the share market until late December 2007. And in fact, then the share price crashed and investors lost much of their money. Centro actually did not go bankrupt. It was kept afloat by its banks. In the end, a lot of its billions of dollars in debt was bought by the big US private equity firm Blackstone.
So, did shareholders lose money out of share value, or is this money that was invested in the company separately to that?
It was the share value,
Right.
but what happened to keep the company afloat, there was a debt for equity swap. So investors have basically lost out because the banks took all of the equity in Centro and the shareholders got very little back. So as a result, there's been this class action, and last year actually ASIC, over the past few years, ASIC took legal action against Centro. ASIC won the case. It found that the directors had breached their duty of care. It actually also fined the former chief executive Andrew Scott. This case today is a class action taken by investors, so it's separate to the ASIC action.
Right, so yesterday we had the developer Maurice Blackburn come out and say that some sort of deal had been struck.
Yes, the investors have won a $200 million class action settlement. So this is actually a record class action settlement for Australia. These investors include, mum and dad investors, but also big superannuation funds. So that deal's just been signed off in the federal court today.
This morning.
Yeah,
right.
There's been a settlement. Now, there'll be further court finalisation down the track, but all of the parties have agreed to the deal. So that includes Centro, which is now a new company called Centro Retail Fund, and it also includes PricewaterhouseCoopers. So they're the accounting firm. PricewaterhouseCoopers was accused by the investors of not spotting the errors in Centro's accounts. So what happened with Centro was that they misclassified short-term loans. Loans that companies have to be declared whether they're short-term or long-term. If they're due within 1 year, you have to tell the market. Centro didn't do that, and that's why this action was brought.
Okay, so this morning we've got the deal signed in court. So how much are people getting back? Are they getting back everything that they'd invested in Centro?
Look, the details are still being worked out. Certainly, it's unlikely they'll get everything back because, as I said, there was a debt for equity deal. So shareholders lost the value of most of their shares. But the total payout is $200 million, and that will be shared between individual investors and superannuation funds.
Okay, so and there is some other action. You mentioned that there's the ASIC action and the...
That's already been concluded. So that was concluded last year, and the federal court ruled that the Centro directors had breached the corporate law because they hadn't declared that the loans were short-term. They said that they were long-term, and also the former chief executive was fined about $30,000.
And so with this announcement this morning, the court action is over for the moment with Centro?
Yes, it's all concluded.
So some investors happy that they've got at least a little money back?
Yes.
Okay, Sue Lannin, thanks very much.
Thank you.